More than $70 billion has wiped off the Australian share market today due to rising fears of a global recession. Every sector posted heavy losses, with energy, materials and telcos being the weakest performers. Let's get some analysis. We're joined by the presenter of the business, Elysse Morgan. Elysse, what were the reasons for the sell down today, given these concerns have been around for quite some time?
They certainly have, Andrew. A couple of things have culminated this week. What kicked off the wobbles on markets was some particularly weak and surprisingly weak manufacturing data out of the US. The US has remained fairly strong in the face of adversity, really, on a number of measures economically, despite what's happening around the world. And we've seen Germany go into recession. We've seen the slowdown in other powerhouses around the world. And the US has so far remained quite stable. We've seen now manufacturing hit a 10-year low. That's sending a signal that this trade war has suddenly come home to roost on US soil, and that's really shaken markets. The other thing that we've seen is the US now launching a potential trade war with the EU, with Donald Trump threatening around $7.5 billion of tariffs on European goods within the next fortnight. So that's also shaken markets. And so all of a sudden we're starting to think, or markets are starting to think, well, we've been high and been getting high on super low interest rates around the world. Perhaps we need to start thinking about why those rates are so low. And this is why we're starting to see such shakes on markets.
In terms of what's happening with the trade war in the United States, and given it is now clearly affecting the US economy in a negative way, is there any acceptance within the Trump administration that of the negative consequences of a protracted trade war with China?
Absolutely not. No, we haven't seen any admission like that from the president. It's unlikely that we will. He's been out again this week blaming Jerome Powell, the chairman of the US Federal Reserve, that's the US central bank, for the situation that the US is in. He was out quickly after the data came out, again pointing to a lack of action from the Fed, that US rates are too high. Keep in mind they're 1.75%, that the Fed isn't acting quickly enough, and this is all the central bank's fault, certainly not the Trump administration's activities on the trade front.
Locally, I see that car sales are still taking a beating at the moment. This is not a bad indicator, is it, as just to what is going on with the economy? Because if people aren't buying cars, they're generally not buying a lot of other items either.
Car sales is seen as a fairly good canary in the coal mine, because not just for consumer spending, but also for business investment and for business growth. And we've seen now car sales continue to contract in Australia, but also around the world. We're seeing that show up in manufacturing figures and in the profit and results from the major car manufacturers around the world. We saw Ford overnight in the US put out some pretty concerning numbers, despite the fire that the Trump administration has tried to light, particularly under automakers in the US. Of course, that US auto maker area has been a key support area for the Trump administration, and they've been very keen to try and reignite that area. Here, as you say, today we saw some very weak car sales figures. It's been on a downward trajectory for quite some time now, showing that yet another leading indicator showing that we're not seeing a huge turnaround in the economy. That's that phrase that the RBA Governor Philip Lowe continues, or has started using recently, that we're at a very gentle turn in the road. Those figures are showing that gentle curve is extremely gentle.
And is there any safe haven for investors at the moment?
Oh, look, looking at the market, there was literally one bright spot. The top performers of the ASX 200, only one actually made a gain, and that was Newcrest, the gold miner. Looking across the broader All Ords, the only bright spots were gold miners. There is a flight to safety, and so they really are the beneficiaries of that. Anything that's related to the global growth story, particularly our tech stocks, energy stocks, were sold down very heavily, as were our miners, and some of our banks were hit with some downgrades by investment banks and analysts today as well. So
yeah,
they
so
were
I
hurt as
suppose
well.
no surprise really as far as the gold mine is concerned, because spot gold prices were up around 1.5%
Yeah.
to over $1,500 an ounce.
Yeah.
So it's a defensive move, obviously, isn't it, for gold?
It's called a safe haven for a reason.
Okay. Elysse, thanks very much. We'll look forward to the business.